Hello and good evening. Here is Doc's Market Minute for Tuesday, the 18th of January. Markets are 100% efficient, which means that everything that's known about that market is priced in to the second. So when the game changes and new information comes along that the market did not anticipate, like what we saw this weekend, this is the type of moves that result from that. Let's discuss. Here's the chart of the S&P 500, and as of Friday, it looked like we had stayed within the ascending trend line. This thing has been going on back here to, last fall of 2020, right? So a good year and a half, this has been in the trend line. And today was the first time that, honestly, I would say that this has now fallen below that trend line. So it's important when we see things like this happen, because everybody sees it and everybody reacts to that. Now, last week I talked to you guys about the danger of this setting up as a lower high. So remember, let's do this as a hard right edge exercise. Let's go back to here and let's pretend that we can't see this. Now, what I talked about in the room was, be careful, don't get complacent about this continuing to go higher. Because the problem is everybody sees something like this and they say, hey, it's a hammer candlestick. We bounced off the trend line. All is good. This will be exactly like this one was. This will be exactly like this one was. And this will be just exactly like this one was. And everybody's looking higher. But what we have to do at all times is say, no matter what's going on in the market, what would happen or what would I do if the market goes higher? What would I do if the market goes sideways? What would I do if the market went lower? And so far, we got very defensive last week because we saw the potential of this to drop down. Now, Thursday, we saw a big outside day. This is a big bearish engulfing candle, dark cloud cover, whatever you want to call it. Friday looked to be that we saved the day, but over the weekend, new information came in on the market about perhaps accelerating the number of rate hikes in 2022, maybe even starting out with a 50 basis point rate hike as soon as next week. Too much information for the market to handle today. So this is why we saw things sell off. Now, this is the way I'm looking at it. I'm looking at it bad news, good news. Bad news is, yeah, we've fallen into a downtrend on the daily chart. The good news is we're that much closer to getting a reset for the market. This green line is the 200-day moving average. This is considered to be home. This is the mean of the price. And so eventually what has to happen is the price will eventually revert back to the mean. It has not been anywhere near the 200-day moving average since back here in June of 2020. And revisiting the 200-day moving average tends to reset the market for quite a while. So bad news is we're falling into a downtrend, and quite honestly, this may be a difficult period for lots of folks if we do test that 200-day moving average, or maybe even go so far as to go into a full correction, which is a 10% haircut. This to me would be good news. So it's almost like ripping off the Band-Aid. Sometimes it hurts for a second, but then it's over with, and I think this would set up the market for what would be likely a phenomenal rebound into the first half of 2022. Don't know when this would happen. It all depends on how quickly it gets down there and the sentiment mix as we get down to the bottom. But you can guarantee that if the price gets down in this area, it's going to be utter chaos and Armageddon when it comes to the media and the general investor sentiment. It's going to be extremely difficult for you to process that information and to make the right decisions if you're getting the same information as everybody else is from the standard financial media. It almost guarantees that you're on the wrong side of the price action. Now, anything can happen, including tomorrow we see the price reverse right back up into there, and no harm, no foul, all is forgiven. but I think chances are pretty good that we're going for the Band-Aid rip here and at least test that 200-day moving average on the S&P 500. That's it for Doc's Market Minute. Thanks for listening. We'll see you tomorrow.